Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by Foundersuite.com. Today I have Milana Lewis of Stem coming to us from Los Angeles. How's your day going?
It's just starting, but it's good so far.
Yeah, so we're recording this on a Monday. Any fun weekend activities that just occurred?
I was out in Austin. I feel like so many other tech people are thinking about moving there, but we are one of those apparently.
Interesting.
Yeah.
What's drawing you there other than, barbecue and music scene?
Music scene's a big one, right? We're in the music business. My husband's family is all over Texas, and he grew up in Dallas, and I grew up in Michigan near the lakes. And so for me, Austin sort of has the good balance of family music and like lake culture, which is just like important. So
It's the trendy thing to do to move to Austin.
Yeah.
I went to business school at UT in Austin, and so was there for 2 years and loved it. It's fun town.
Yeah.
But I guess you're in LA, so you're used to driving. I was gonna say you're driving a lot. There's a lot of traffic, but maybe since coming from LA, that's no big deal. So
Well, we're looking to move an hour outside of Austin, so we won't be in the city. But in LA, I actually haven't had a car in 6 years, so I actually don't drive. I'm one of those few people that either walks everywhere or when I need to take an Uber or a Lyft.
yeah, that is a rare person. All right. So what is STEM? Tell us what you guys do.
Yeah, so STEM is a platform for primarily musicians today that helps them manage their business. And what we mean by that is we help them manage their digital distribution, so monetizing your music and getting it delivered to platforms like Spotify, Apple, Amazon, all the big ones. From there, the thing that we pioneered was the split. So one of the biggest pain points of the music business is it's a really complicated network of various freelance workers or individuals that contribute to the process of making a song, distributing a song, and marketing a song. So there's all these various people that need to get paid. And in a world where most artists today, right, 40% of the market's actually independent. They're not working with a major label. They don't have the infrastructure of the accounting department and royalty analysis teams to be able to administrate those earnings. So we automated that logic in our platform. So independent artists or labels use us to not only get their music to Apple and Spotify and Amazon and all the major stores that matter, but from there, as the earnings come through, we can automate all the royalty accounting and all the payouts to their collaborators, whether it's their songwriter, producer, the social media coordinator, whoever it is that gets a participation of the revenue. And then most recently, in this past year, in February, we launched a new product called Scale that helps artists and anyone who's getting paid through STEM access capital to be able to grow their business. So it's an advances product that was inspired very much by the new alternative advances products that exist to other small business owners. And we thought it was a great alternative to both fair and flexible financing.
Interesting. Wow, that's a lot to dig into. So very interesting. So I guess let's take some before and after scenarios. If I'm an artist, I can obviously create my music and I can get it on Spotify and iTunes and then get paid, no problem. But if I've got collaborators, is that really where the sweet spot comes in? I mean, if it's just me, do I need this?
Not really. So that's why we don't focus on really the DIY segment. We're more focused on artists that are, a little bit further in their careers. They have a team of managers, they have a team of collaborators, or they have various collaborators they're working with pretty consistently. And the biggest pain point isn't just about getting the music out there and getting it heard. The bigger pain point is, how do I get everyone paid?
Yeah. And let's see, I'm trying to ask this without getting too into the weeds and technical, but if I've got a handful of collaborators, and I don't know what a typical or average scenario looks like, but maybe, songwriter, producer, you mentioned like a social media person, like how am I entering the forms like John gets 10%, Sandy gets 25%, and simple as that? Uh-huh.
Yeah, and then you give us an email address for each person so that we can confirm their share. So it's on a consensus model. That's the other thing that's different about the way we handle it versus anyone else that's come thereafter. So we require consensus, and we also handle the like automated mechanical royalty payout, which is the biggest pain in the ass for many artists. And it's one of the reasons why songwriters and producers complain that they don't ever see the money that they're owed, is because in most cases, independent labels and artists don't do that part of it.
First of all, what's the consensus model? What does that mean?
So that means if you and I collaborate and we agree that we're going to split the revenue 50-50, I would add you as my collaborator, put in your email address. You would get an email from STEM that says, hey, Milana just added you as a shareholder to this great song. Please confirm your split. You would be prompted to create an account in STEM if you don't already have one, confirm your split, and then put in your banking information so that every single month on the 15th, like clockwork, you get paid from the earnings of the song. But what's really nice is that at any point you can log into the dashboard and you can see both the trending data as well as the financial data. So as a collaborator, you're completely in the know on how a project is performing that you helped contribute to some extent. And that kind of visibility has never really existed in the business.
That's interesting. Yeah, I can see that. And I guess this is really applicable. I'm too old to be hip about, but I mean, you see a lot of like rap and hip hop. You have a lot of collaboration on different songs, right? And so are those getting complicated to split up? Like, hey, I came and did I'm going to sound so stupid saying this. I did a little rap on your song, and then you're going to come to a rap on my song, and we're figuring out like a way to split those up.
Yeah, and even
Basically.
more so in that genre, people sample each other's music. So it's not even about, hey, I actually contributed to the original work. It's, hey, I want to be able to give a piece of the earnings of the song because I'm sampling this older song that already has been distributed. So it makes it easier for artists to be able to clear samples because maybe they can't pay the full upfront fee, or they don't want to pay the full upfront fee for the sample. But with us, they actually have the ability to negotiate a back-end participation deal. So they pay a little bit upfront, but then the owner of the musical recording that's being sampled in this new track gets to benefit from the success of that track as well.
That's cool. Yeah, I can see that. Very interesting. And then jumping around a little bit, what is it like? How many streams does it take to really start earning economics on a song?
Yeah, it depends on the audience of the listenership, right? So much of the pricing dynamics are around that, but on average in today's market, I would say about a million streams equates to somewhere between 3,500 and 4,200, depending on the time of year and who the audience is in the platform. But that's sort of like an average blended fee.
Got it. Cool. Just a little bit more in the business. So the advance it, if I have a track record of producing hits that kind of move the needle or getting million plus streams, now I can basically get an advance loan on future songs, or am I even close to that?
Yeah, you can get an advance for anything you want to use it for. You can put it towards new music, or you can put it towards buying a house or paying off any debt or living, right? Like in the time of COVID, so many of our artists were getting advances on their music catalog, and they don't have to be huge hit makers, right? Like what's really nice about our model is that you can request an advance for as little as $5,000 to as much as over $1 million, right? A few $1 million, depending on what your earnings history looks like. And what we saw during COVID was when tours got canceled, that's a lot of dependable income that people were relying on that they weren't able to get anymore. And so, for them, a lot of the artists were looking to get scale advances from STEM as an alternative to just having money to live.
Interesting. Cool. Let's see here. What was the backstory? How did you come up with this idea? So for anyone just listening and not watching, we have some gold, maybe platinum, I can't tell what color that is, record in the background, some Forbes articles. What's your background? How'd you come up with this?
Yeah, I mean, a lot of the stuff is mostly recent from STEM. The one up here, there's a little variety thing I was featured in Hollywood New Leaders, and that was when I was a digital talent agent at UTA, which is one of the 3 big talent agencies in Hollywood. I got hired on there with the mandate of enabling the agency's clients to go more direct to their fans. So figuring out the right tools and technologies for them to bypass the traditional label or studio or network system to be able to self-distribute their comedy specials, their movies, their songs, whatever business that they were in. And what I realized in the evolving landscape, right? So I had my job at UTA from 2010 to 2015 when I left to start STEM. But around 2013, I started seeing that there were all these tools that were built for distribution of content, monetization of content, and audience development. And then the last piece that was missing was the how do I get everyone paid piece, right? The financial aspect. And I looked at other businesses, right? E-commerce, the whole entire sharing economy with platforms like Airbnb and Uber, and the way that these businesses and verticals grew, really support was because of the support that they created of tools for small mom and pop shops or business owners to be able to run their business independently. And I felt like in the entertainment business, what was truly missing was just a platform that helped with the financial aspect of running a business. Not so much the creative, not so much the marketing, but truly the financial aspect.
Yeah, it's quite a challenge to take on because it seems like, at least historically, the whole royalty distribution is such a complicated mess, right? I don't even know anything about it, only a tiny fraction of knowledge, and it sounds like a huge pain in the ass to try and solve. So, congrats.
But you know what's interesting is that it's not that complicated. I think it feels more burdensome than it is. And simply because of that perception is one of the reasons people don't even deal with it until it becomes so big and hairy that they have no other choice. And that's one of the opportunities for us as a business is to really make that feel less intimidating and have it be something that artists from the beginning of their business can set up the right processes in place so that it never feels burdensome and it never creates friction.
Interesting. Cool. Let's talk about raising money for this. So how much have you guys raised and over how many rounds?
Yeah. So we raised a total of 22 million to date. How many rounds? I think 3 total rounds.
And let's see, let's start with maybe getting this going in the earliest. Did you bootstrap it or did you have friends and family investors or go straight to angel or what?
Yeah. Because of my job at UTA, sort of being at the intersection of tech and entertainment, I had developed a lot of early stage relationships with investors. We actually started our own fund at UTA when I was there, making investments ourselves. So I got to see and sit on the side of the investor evaluating companies. And so through that, I nurtured a number of relationships with people like Gary Vaynerchuk or Scooter Braun or Mark Cuban. And so a lot of them knew that I wanted to be an entrepreneur eventually. And so, you know, I was pretty honest about it. And I think for anyone who's sitting at a big company, has an idea, has the itch to be an entrepreneur, notice the people around you who can support you in the future and be really honest and vulnerable about the fact that you're thinking of being an entrepreneur. And it's amazing how much people will help and support you along in that journey, right? These people get excited about making early stage investments because they want to identify that person before anyone else does, right? It's kind of like finding a pocket listing in the real estate world. You want to find that opportunity in someone that you like and that you believe in and have the opportunity to be their early backer and their early investor. So for me, as I had the idea and as it came together, I was sort of sharing it with people around me who I knew could potentially be interested in a business like this. And I was also honest with my company at UTA that I wanted to go off and do this. And so with their support and the support of some of the early angel investors in my network, mainly, you know, Gary Vaynerchuk was the first one to say yes and the first one to write a check. I was able to put together a small angel round with some pretty big angel names.
So that's impressive. How do you go from kind of socializing this idea, I want to be an entrepreneur, I have this idea of solving to actually hitting them up for money, right? Because it's sort of like that, sure, I'm happy to give you advice, but, you know, how do you kind of make that switch?
Yeah, I mean, I had to build credibility with them. And the way I did that was by sourcing and bringing deals to them and other companies that I got an early look at. So being at UTA, I got to see companies like Uber when they were raising their early seed rounds, or Casper or Warby Parker, like these types of bigger deals. And I had my ear to the ground. So I had a lot of intelligence around who was raising, what was a good deal, what wasn't. And it was through these kinds of dialogues that I was able to build a credibility with these investors and understanding what it takes to get funded. The other thing is at UTA, we incubated a couple of companies, Awesomeness TV, Shop Hers, a number of others. And Hello Giggles was one that I actually spent a lot of time with myself. And as a part of helping these businesses grow, I oftentimes found myself helping them raise money, introducing them to investors, And after a while, I sort of built up my own confidence in being able to raise money because I was able to help other companies raise and connect them to investors and have that be fruitful, so that when it was my turn and I had my own idea, I sort of knew what to do.
Interesting. Let's go into a little more detail on that seed round, because I'm looking at like PitchBooks. There's about 21 angels on there. Some interesting names like Mark Cuban and some of the others you've mentioned. Did you simply socialize it to people that you had already kind of cultivated, or did you run a real process? And, how did you raise that seed round?
Yeah, I run a really tight process.
Uh-huh.
And I think this is the advice I give to most founders is you can socialize it, but you got to run this like a pipeline. You got to run it like a sales process.
Mm-hmm.
And so for a year before I started raising, as I was working on my deck, working and finishing, putting together the early team and understanding sort of what the pitch was and the package, right? You got to think about the package, which was the team, the idea, the market opportunity, the timing, the amount that you're raising relative to like the potential outcome that early investors are looking for. And so as I was putting out all these details and I would meet people socially or I would meet people through business, I would make a list myself of lead potential investors, right? Like a lead list. And I would have, like, my goal is to always, for every round, have a list of at least 100 names.
Mm-hmm.
And I would note in my conversations with them, before I would even pitch them, I'd always ask, like, what are you excited about? What have you recently invested in? What are some things you see that are open market opportunities? What are the types of check sizes you write? What kind of companies do you, sort of like early, in sales, you call it like discovery questions.
Uh-huh. Yeah.
And I would just keep a deliberate Excel sheet of all that information. The good news with today is that you have Google Sheets on your phone. So I would take notes on my notes app, and then I would quickly go, when I was going back and forth between a meeting, if I couldn't get to my computer, just populate my Google Sheet and fill out the forms in the fields. And then right before I started fundraising, I prioritized that list. I said, okay, who do I think are going to be the people who know me the best, where the leap of faith is the shortest?
Mm-hmm. Mm-hmm.
So who can I get to say yes that also will be a good signal to other future investors? And who are the people that are going to say yes where it doesn't feel like a stretch and reach because they've built a relationship with me over time and they sort of have an idea of me as a business person and are willing to make like a blind bet. Because at the first couple investors are making a blind bet, you have nothing to prove in most cases unless you bootstrap the business to revenue. Yeah. And all I had was a deck, right? Like I didn't have a product. I had a couple of potential co-founder team members, a deck, and relationships. And so I got to witness what successful fundraising looked like and when things didn't go well. Mm-hmm. And in order to run a really tight process, you have to run a really tight timeline. And so I gave myself 4 weeks for the first phase of conversations. And so one of the things I did strategically is I planned a trip to New York, San Francisco, and LA, mm-hmm. or being in LA, where I would spend no more than 3 days in each city and just book the meetings back to back. Because you're there for a confined time. They know you're going to a different city, which they assume you're going to be talking to other investors. And so you can create a sense of FOMO and to create a sense of urgency as well. And you always should have like a drop dead date in your mind. So in the first round, I gave myself 60 days to raise. And ran the first process where I tried to have all the initial conversations. And in the initial conversations with the first few, it wasn't really me pitching the business. They've been hearing about the business idea for a year. They've been watching me put together my initial team. I've been calling them for advice on what law firm to use for docs and what, and whether or not some of the people I was thinking about would be good fits for the business. So when I came to, I was like, I'm ready to raise. The conversations were 15 minutes long. They weren't like full pitches. Like, it was kind of funny. I think at the end of the conversation with Gary, he's like, I probably should look at the deck, shouldn't I? And I was like, yeah, I'm happy to send it to you.
Mm-hmm.
And so it's not like that for everyone, but the way that I ran it is like, I brought people on my entrepreneur journey in the beginning. Now at later rounds, it was very different, right? But the biggest advice I could give is like, you start raising a year before you start raising, because you start building relationships and you start building data points.
Mm-hmm.
Mark Schuster has a great blog post where he says it's a bunch of dots that connect and align, and you want to create as many dots as possible before you get to the place where you are actually asking someone to invest in you. And that philosophy is pretty similar to like Gary Vaynerchuk's philosophy, which is like jib, jib, jab, I think is what he calls it. But like you give, and then you make the ask.
Oh, interesting. I hadn't heard that. That's interesting. jib, jib, jab, give, ask, kind of something like that.
Yeah. So just create as many touch points and data points along the way. And then once you have a couple of key names, like everyone else starts to come together. But you can't do this on like an infinite timeline. You can't do it on an abstract timeline. You've got to run it like a real process. And the best thing is when people say no really quickly. That's my favorite, right?
Yeah.
So the most recent round we did, I had a lead list of about 100 people. I did intro calls with about 65 of them. And to me, an intro call is a 30-minute call. Some of these people I've never talked to, others I did. So it's me catching up with them.
Yep.
And the intro call, you just want to get a sense of like, could this even be a fit, right? Like, what are they interested in? What's the check size? And this becomes super important later on.
Call? Like, are you actually giving your presentation during the intro call, or is it more discovery again?
It's discovery. You don't. You talk about your background. You talk about what you're interested in. Maybe leave 5 minutes to talk about at a high level what you guys are doing. But I don't give the full pitch. The other thing is, in the first 2 rounds, I was really deliberate about my process and who I was willing to talk to and who I wasn't. And the reason for that is because I wanted to make sure that I was only pitching early stage seed investors. I didn't want to pitch anyone that was a seed or a Series A investor because I knew I didn't have the proof points in place to gauge their interest. And there's nothing worse than pitching someone when you know they're going to say no, unless you actually want to build and nurture a relationship for a long time. So that's why the intro call is important, because it's not a full pitch. So you get the introduction. Let's say it's a firm like Andreessen Horowitz or Bessemer or General Catalyst. These firms invest at seed, A, B, and C rounds, right? They can invest at any point. But for me at the time, I was like, I don't think you're going to invest. It's too early. We don't have basic data points. So let me just use this as an opportunity to be like, hey, here's what we're doing. Let me get to know the things you're interested in. Make sure you're the right partner anyways at that firm. Because so much of the process of getting to a yes is making sure that you're not just pitching the firm, but you're pitching the correct partner. Because if you go to the wrong partner at the firm, then like you might as well not even be pitching them if there's a better partner out there at that firm. And sometimes the partners will pull someone else in. But they're also too busy to think about that critically, right? So I actually got really upset with a couple of analysts at some of the firms I was pitching who got really excited about what we were doing and would pass around my deck. And I would reach out to them and say, hey, I really appreciate that you're sending around my deck because you're excited, but you're actually ruining my process. You're giving people my deck as if I'm out there pitching a bunch of people. I'm not. I'm very deliberate about who I'm pitching. And so I'd like, instead, if you were to come to me and ask if I'm interested in the introduction before you just blindly send my information around.
Interesting. Yeah. You started to give a little numbers on this most recent round. Most recent round was Series A or B?
I don't follow those because we just raised what we need at the time.
Okay. Let's talk about this most recent round, though. You started to put some numbers around it. 100 people on your list, made 65 or so calls. How did the rest of it shake out down to the bottom? Yeah.
So out of the 65, 16 of them said, we mutually agreed it's not a fit, right? Like they're either too late, this is an industry they don't really have a thesis around or get. For a number of reasons, they just pass on the phone, which is great. Love those quick passes. And so how do you make those calls meaningful? Sometimes you don't, but sometimes it's great to be like, hey, who else do you think I should be talking to? Are there other investments? And some of them will be like, hey, actually, you should talk to so-and-so, you should talk to so-and-so. And then I just keep populating the lead list. And sometimes
from people who said no, like this is always one of these like strategy questions. Like if someone passes, do you want an intro from them? But you were in general okay with getting intros from people who pass? Yeah.
I mean, it depends on why they passed, right? Like if they're too late stage, I'd love an intro because if they usually write check sizes of 20 and 50 million and we're truly too early for them, then yes, I want them to make an introduction to someone that they trust. And that becomes really valuable because then that lower fund is going to be like, oh, great, they're interested for a later future fundraise, but it's too early for them now. Those people you should definitely take interest from. But if they're the same stage, then no.
Yep.
Right? Like I wouldn't ask someone who writes $5 to $10 million checks that passes on STEM to make an intro to another firm.
Yeah.
And then I'm like referencing a card that I wrote out because I actually run such a tight process that I have the metrics to reflect on and do what I know. So this is what I'm referencing for anyone who's listening. And I think you guys are going to post this picture as well on the blog. But 21 of those people just went completely MIA. Never followed up, never responded to my follow-up emails, just like fell off the face of the earth. And that number feels high, but that's like pretty usual. And one of the other reasons this could be a little bit higher this time around is I started fundraising in mid-February, and did my first intro calls through the first 2 weeks of March. So for everyone who can remember what that felt like, this was when everyone went under lockdown, COVID went crazy, or people were going crazy because of COVID. The markets were all over the place. Every fund was freaking out. And so a lot of people probably just went MIA because of all the chaos.
Totally. Yep.
So super fun. But there were 28 that were really interested, and I fully pitched.
Yep.
And out of those 28, 3 of them passed. And again, we're like, let us know how we can be helpful.
Yep.
And so for some of those people, I would say, all right, give me feedback. What, like maybe you don't understand the business, but give me feedback on the pitch. What was clear, what wasn't clear, if there's any advice you have on my materials. And you'd be surprised how many people are willing to be helpful.
Yep.
If you're just asking, right? Like, I think so many people I witness that are raising money is like, they take passes too personally.
Mm-hmm. Yeah.
And I don't, right? Like, most investors invest in 2 to 3 companies a year, but their job is to hear pitches. And so if they're doing their jobs correctly, they're working 40 hours a week. And out of that, they're listening to pitches for 20 hours of those, right? They're dramatic in so many companies. They're probably hearing pitches from, I don't know, like 500 companies a year.
Sure. Yeah.
Or so. So like, you can't take it personally, right?
Yep.
So you have a 99% chance of saying no. And that's why I run with 100 names, because you only need 1 to say yes.
Great. 20, let's keep going with those numbers out, because I think this is fascinating. 28 interested, fully pitched, and then how did the rest of it shake out?
Yeah, so like I said, 3 passed immediately, 25 asked for data.
Yep.
They wanted to see financials, they wanted to see KPIs, they wanted to see last quarter's numbers, they wanted to see previous board decks. And so out of those, 9 more passed and said, we want to see more traction. It's still early based on the hypothesis you have. And then 14 of those brought me in for partner meetings.
Mm-hmm. That's great. Good numbers.
And then out of those 14, 6 passed again after the partner presentation and felt like for one reason or another, they just couldn't get there across the finish line, so which is fine. So then you've narrowed down on 6. And now you have to figure out, how am I going to build conviction for these 6 people that I just need 1 to cross the finish line and say yes.
Yeah.
And that's all I care about. And so from there, you try to help them talk to other people in the business, do reference calls, whether it's with customers, business partners, industry personnel. And, one of the other things is you got to have your short list of people throughout the year before you fundraise on who you can call on to be a good reference, whether it's a reference for your business or a reference on the industry. And so from there, out of those 6, we actually had 5 say yes.
Cool.
And you get 1 lead. And everyone else sort of follows along.
I think that's fascinating. Any other tips for, or even more stories, tales from the trenches of getting those 5 out of 6 over the finish line? Because that's sometimes the hardest point, right? The pitch meeting, not so hard to get sometimes, but like getting them over the finish line. Yeah.
Later on, you really got to depend on your existing investors to help strategically back channel behind the scenes and help create both FOMO and momentum. So I did weekly calls with my core investors to keep them updated on my progress. We had a shared Google Doc where they could see my whole entire pipeline sheet, who I was talking to at any moment, what the feedback was. I use advisors to back channel. What you don't want is people reaching out of nowhere, but you want them to be in the know so that when a new investor you're talking to reaches out to your existing investors can drop little things like names of other partners they know you're talking to. They know where you are in the process. Like, try to get everyone on the same page, because it's a team effort to get someone over the finish line. They're going to be sending emails back and forth. They don't just diligence you, but they diligence your existing investors on the business. And so try to make data as accessible as possible. Be there to help like your existing investors respond to emails, because sometimes they're not sure what you want them to say. So know how to move the pieces of the people around you to get to the final outcome. And you got to be in lockstep.
You got to be what? Say again?
In lockstep.
Uh-huh. Mm-hmm. So weekly calls with your existing to help them kind of drop little things to spur some FOMO. I love it. Um, Total tangent here. What's it like? Is Mark Cuban must have 1,000 deals by now with all the time on Shark Tank. Like, can you engage him on helping drive this FOMO, or is he so busy? He probably has a team.
He's not a big investor. So when I say I engage my existing investors, it's really my other lead VC investors. It was people like Upfront, Aspect, at the time Evolution, some of our angel investors that were former founders and entrepreneurs. So people like Adam Nash, who's the former CEO of Wealthfront, that is on the board of Acorns, knows a lot of fintech investors. Michael Vaughn, who's on our board, who is the former COO of Venmo, that's now also a venture partner at another firm called Oak, and helps, and also angel investing companies. So it's the people who are closest to the business. It's not my list of, I think I have like, you said there's 22 names on Facebook.
I think
there's
Pitchfork
probably
says like 22 or something like that.
There's more, like 2 to 3 times that number, unfortunately. It's so many like small investors. But the other thing that's interesting with STEM is that half of our investor group is actually users. So many of our customers that are managers or artists, after having a great experience, have offered to invest, and we've accommodated them at whatever check size is comfortable. So we've taken checks as small as a couple $1,000s to bigger checks from obviously bigger individuals.
Interesting. Cool. Very good. I won't keep you much longer. This is super fascinating. Any other tips we haven't talked about or they'd like to share, or just advice you would give your younger self if you were doing this all over again? One of my favorite
early on, less is more. Like, we took on way too many small individual investors. I would have rather put together like an angel list where I could put all those smaller people through, because the process of managing investor relations and communications with each of them has consumed so much of my time. So that's one piece, is like less is more. The other thing, and this is super important, this is one of those things that really created a lot of pain for me this year, was make sure that when you're taking money from early stage funds, if they're going to lead around, meaning they're going to be a primary investor, they're committed to being in that business. So one of our lead investors, they shut down their fund.
Okay.
And that becomes so painful to have to figure out how you restructure them out, either through a buyout or whatever else it is. There's a lot of early stage funds that are not committed to being funds, right? It's not their core competency. So you see other corporate companies starting investment arms, and for them, it's experimental. And it's great to have them as strategics, as like a small part of your cap table, but not as lead. So if you're a company that's contemplating raising money and has an opportunity to get money from one of these, if you have other options around the table, pick a fund that's going to be around. And more importantly, make sure that the person that you're excited about leading the investment on behalf of that fund is a real partner. Because the other thing that I learned is, the people who I got excited about at some of the funds were not full-time partners until they left. They didn't have a carry in the fund. So if you're evaluating, you're not just pitching your company, you have to also vet and evaluate the potential investors, because there's so many headaches later on. Like, if the partner or the person leading the deal leaves the fund, no one at the fund may care about you.
Yep. Right.
And now you have dead weight on your cap table.
How do you assess this, other than saying, hey, do you plan to be in this job for the next 10 years? Or,
Well, you just ask the question, do you have a carry? Do you get a carry in the fund?
Yeah.
What's your upside? Because if you don't, you're going to leave.
Interesting. That's an interesting.
At some point, it's inevitable, right?
Yeah. Very cool. All right. Anything else we haven't covered that you'd like to share with the audience? This is great stuff, by the way. Really good.
I'm happy to help.
Okay, awesome. If people want to learn more, it's Stem.is, correct?
Yep.
Very good. So who are you most wanting to lure in? Just artists, right? Performers or other parts of the ecosystem? Anything else?
So, we're primarily focused around artists, management teams, and independent labels today.
Got it. Cool.
Yeah.
All right, Milana, this is super exciting. Congratulations. And it's clever idea. Love your process. And we'll catch you after your next round, see how your strategy's changed. How about that?
Sounds great.
All right. Thank you.
Over now. Talk soon.